most players, or a lot of players, will be getting in buys off this trend line, and you can see the market then dumps and takes out all these losses before having a nice big push off. So in here, I see this as a position that I would like to buy off, because there's a big push up there, there's imbalance in the market, and I know the market is either looking to sweep liquidity or is looking to rebalance. So I keep them two things in mind when I'm looking for trades, and I'm also inside of a trade.
All right, folks, we got Connor Sadler in the house. We've just done an epic podcast. Go and check it out below. But now what he's going to do is break down his full-on trading strategy. He calls it bankers style trading. So if you want to find out what this is, it's coming up in a second. Now, the question I've got, is it just ICT with Trendlines? We're going to find that out in a second. Now, after you've watched this, do be sure to check out the podcast where Connor walks through his entire trading journey, including the other strategy he was trading that took him from £250 to over 100,000 over a couple of years. So, Connor, welcome back to the show.
Yeah, thank you, mate.
Our sponsor, Blue Guardian, is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Okay, so we have order NZD. Let me talk you through my thought process on this. So the first thing I like to do when I come into a chart is I like to identify areas of liquidity. So that could be trend lines, equal highs, equal lows, imbalances and stuff like that. So the first thing I noticed on this chart, this was a while ago now, was this trend line here being taken. So what I mean by taken is I like to see is most players, or a lot of players, will be getting in buys off this trend line, and you can see the market then dumps and takes out all these losses before having a nice big push off. So in here, I see this as a position that I would like to buy off, because there's a big push up there, there's imbalance in the market, and I know the market is either looking to sweep liquidity or is looking to rebalance. So I keep them two things in mind when I'm looking for trades, and I'm also inside of a trade, because then I can look at the take profit levels. But I'll explain that in further detail in a minute. So the market there did come and fill up this imbalance and then play off, but it also broke structure now on this 4-hour time frame. So I'll be looking inside here now for a new trade. I've identified this imbalance here. But what I like to do is, again, I look for liquidity sweeps. So in here, there's a lot of liquidity, equal highs, that's been taken now by this. As well as that, we had a trend line here now be taken by this push up here. If we look on the 1 hour, it's a little bit more clearer, with a nice big push down with some imbalance sitting inside of it. So this is going to be a counter trend trade. So this is going to be a smaller trade coming down to hopefully to make that new higher low and push up again and make that new higher high, right? So with the counter trend trades, I don't tend to stay in them too long. Of course, it's the counter trend, but if it is a trade that I'm looking at that is more with the trend, I will possibly look at staying in it for a lot longer. For example, here. So this one I took on Monday. Let's dive into my thought process behind it. So like I said before, we have a liquidity sweep here. This green line took out a load of equal highs, people stop losses there. We also have a downwards trend line here that also took people stop losses. And I like to look above this now, because what can I see here? In here, not much imbalance. There's not much liquidity that I can see that's going to be possibly further targets. If price was to come up here, would it continue up? I'd like to think not. I like to look at the markets with a lot of analogies. So in this sense, I like to look at it as magnets. I've said this a lot of times before. So if there was imbalance and liquidity and stuff in here, then I would see them as magnets potentially pulling that price upwards. Whereas if I look below, we have equal lows, we have imbalances and stuff like that, as well as wanting that higher time frame structure to come and make that new higher low to make that higher high, right? So I look at all these sort of things as magnets. Is there more magnets below or is there more magnets above? In this case, it's more magnets below, so I'd look for more of a sell. Now, I won't just go off that completely, so please don't try and trade just like that as looking at it as magnets. There's also obviously a trading style behind it, but I like to keep that analogy in my head when looking for trades. So what I did here, identified this position as a liquidity sweep, this trend line. There's not much above. It's a bit of imbalance in there. So I thought, okay, this could be quite an interesting spot that we could sell off. So there's a couple of ways I like to enter. The main way I'll show you now is I like to enter on the lower time frame. So I like to see something like this. If I could just copy and paste what's happened there into here, but on the smaller time frame, so the 5, 15, 30-minute time frame, then that's perfect. I'd like to see that again. So let's go to the 15-minute. So here again, we have equal highs. So this is happening now within our imbalance zone. So I thought, okay, this is quite interesting. This could be setting up for a nice sell. We have what I like to do actually is put a rectangle in this zone where the imbalance is. And I like to just wait for something to happen inside this zone now. Which in here, of course, we can see that's starting to form some equal highs, which it does. So I had an alarm. You can even see my original alarm there, waiting for price to come and take them highs out, because I like to set alarms on the market. I take 1 or 2 trades a week now. I don't particularly sit and look at the charts all day. I wait for my alarms to go off. That's why you can see these green lines absolutely everywhere with alarms on them. I'll wait for my alarms to go off, and then once I'm notified on my phone and on the computer, I'll go and check it out properly. So again, equal highs have swept. So I know now after that sweep, after all this imbalance fill, I'm looking for targets down here now for sales. But my entry for this would be the same thing, a sweep, a push down, look for a bit of imbalance or the last bit of imbalance to be filled. So in this case, we have, after the sweep, a push down. That's left some imbalance in here. A nice little test back up into that imbalance. So I've now entered for a sell. Stop loss. 2 places you can put it. One is here. That's a bit tighter. So it could be more of a chance of that hitting a stop loss here, because of how tight that stop loss could possibly be. If we look here, it's not much. It's only 10 pips. Now people end up with smaller stop losses, but I like to make sure I'm covered. Now, the markets do change a little bit and adapt a little bit. So I will adapt my entries depending on how the market is playing out at this certain time. So at the start of the year, I would have just put my stop loss above this because that was working out for me. But now I like to see my stop loss will come above the original high of the move that I was looking at, that original liquidity sweep. Okay. Now that is not too bad of a stop loss. Go back up here. It's like 22 pips there. So again, that's not too bad, and it gives a bit of breathing room in case it does come up and just tags above that high and drops, which I see happen a little bit often recently. So I've adapted my trading, not my trading style completely, but my entries, so my stop losses will now be placed a little bit higher just to give it a bit of breathing room. Okay, so being in this trade here for a sell now, let's get our short position back on. The trade was at 22 pips odd, and was above that high. Okay, so this being a counter trend trade, what I like to do is just take a 1 to 2 or 1 to 3 off the charts. Now, of course, we all like to see the bigger trades, it just absolutely flying hundreds and hundreds of pips, but this is a counter trend trade, so I will just take what I can off the charts. So what I did was a 1 to 2 on this one. Now, with every trade I do, I have the same rule with my stop loss, and that is I'll move my stop loss to break even at 30 pips. Now that was just through trial and error and testing different sort of break even zones. So if it was 30 or 15 pips in profit, I'd move my stop loss to break even, and I found that that would quite often tag me at break even and then end up dropping the way I wanted it to go. So which was very frustrating. So trial and error and just learning from your losses is absolutely crucial. Like I was saying before, go and look back at your trades that you've lost and evaluate what's gone wrong. So for me, 30 pips is my zone. So I'll put a just like a horizontal ray here at 30 pips profit, and I'll wait for my alarm to go off, which for me was the next day. So we had here 30 pips profit. It had already gone off once I'd woken up. I wake up at 7 a.m. every day just so I can see what the London Open does. And these boxes, by the way, are the Asian sessions. So for me, the UK time, the Asian sessions here. I just like to see where they're at and each day while I'm trading. So London Open, I wake up at 7. My alarm was already off. I moved my stop loss to break even, which is nice here. I'm just going to move that there for the 1 to 2 showings here. So once I've woken up, I wasn't in 1 to 2 profit just yet, but I was waiting for it to come down to that 1 to 2, which it didn't take too much longer after that. And I took the whole trade off the table, which I'm glad I did because that seems to be rotating now, but we'll see. It could continue down, continue up. But I've got my money off the market now. I'm not going to be too greedy with a counter trend trade. So let me show you quickly as well. If I was with a pro trend trade, for example, and I was in this trade for a sell, the things I would kind of be looking for to take partials off is one, structure on this lower time frame. So something underneath here with these equal lows, I'd take 50% off. Or the next zone I'd be looking at. So once I've got 50% off the table, and that's 50% of my trade, so half the trade, I'll look at taking another 25% down here once it's filled this big bit of imbalance. And then possibly, again, if it does come down underneath here, I'll take the rest of my trade out. So I just like to let the trade run and try and maximize the profits when I can. This is when it's a pro trend trade. This is the counter trend trade. So I just took the 1 to 2 off the table, which people like to see, of course, like the bigger trades, but what 2%? So I risk 1%. So 2% in a trade is absolutely mental. Like, it's people look at it as in, oh, it's only 2%, but you could make 2 of them a month, which would be 4%. 4% a month is life-changing money. Now, if you've got a big account, or you've grown your account, or you've gone down the prop firm kind of route, and you've got a 100K funded account, 4 grand from 4%, that's absolutely life-changing money for some people. Completely life-changing money. That's a lot of things paid for. So be happy with taking 1 to 2s off the table, or 1 to 3s. Be happy with that. So I'm more than happy with taking a 1 to 2 off the table. That pays the bills for the month.
Folks, Black Bull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Black Bull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast. All right, folks, there you have it. This is how they do things at TFT. So if they do want to find out more about you, Connor, what's the best way in TFT? What's the best way for them to do that?
Yeah, so there's a few ways you can come and check out what we do. We have the free Facebook group. There's thousands of people in there. You can just come and check out what we do. We actually put loads of our content, loads of our trade styles, our trade setups in there. You can come and check that out. It's called Tradesmen to Forex Traders Trial Group, where you can come and see what we do. We actually have free education and stuff like that as well, and a Discord you can come and join. Or you can come and look on the website. Kind of see here, www.tft.co.uk. And Tradesmen to Forex Traders will be across all socials and stuff like that. And then my personal socials is just my full name, Connor Sadler, as you can see in the interview. And if you want to get a hold of me and have questions for me, then I'm more than happy to answer them.
Brilliant. Well, look, folks, what we'll do is put all those links in the show notes page, links below this video here. While you're clicking on around down there, hit subscribe, like, and that notifications bell, click all, and we'll see you in the next episode.